If you are looking for some tax guidance or trying to figure out what the autumn budget might mean for you in terms of buying a property in London, then definitely stay tuned because we've got some fantastic experts that you're going to want to hear from. Hi everyone, Ugo Arinzeh here. Thanks for joining me on another episode of my YouTube channel. As a property agent, I absolutely love helping my clients, whether they're domestic or foreign buyers, find their perfect piece of London. And as you know, when you are buying, there's so much you have to consider. And a lot of it has to do with taxes. And with the recent autumn budget that came out, there's been quite a few changes that are definitely going to be impacting you, especially if you're a foreign buyer. So I thought in this episode, we'd bring together some fantastic experts that have looked after several of my clients, so absolutely trust them. And it's the firm of Sopher Co. And so I'm going to be having a conversation with both Mimi and Sue, and I'm going to let them introduce themselves before we dive in and start asking those hard-hitting questions. So Mimi, welcome to the channel. Please go ahead and introduce yourself and tell us a little bit about who you focus on and support.
Hi, everyone. I am Mimi. I'm a senior tax manager on the U.S. team here at Sopher Co. I joined in 2022 after moving from the U.S., where I spent over a decade in public accounting. My focus is on helping individuals with their tax planning and compliance. I'm a U.S. licensed CPA. I'm very excited to be here and looking forward to our conversation today.
Great, thank you. And Sue, tell us a little bit of intro on you.
I'm a personal tax director with Sopher Co. I specialise with high net worth individuals, especially those that have a non-dom element, and I will have to get used to not saying that phrase because it's disappearing. And I do deal with a lot of clients who are from overseas that have property interests in the UK.
Well, that is actually, I couldn't have asked for a more perfect segue because you've said now the non-dom designation is going away. So tell us a little bit about what has happened, what are the changes, and what people can expect going forward.
There is big changes, and we had been prepared by it because it was in the manifesto of the Labour Party, should they come in, that these are the changes they were going to introduce. There was a perception that the non-domicile regime, which entitled people that were not born in the UK, who didn't have any particular strong ties to the UK, that were just in the UK temporarily, even though that temporary period could in some cases be up to 15 years, could enjoy the remittance basis of taxation. Now, that theory of remittance basis and that applying to non-doms is going away and is being replaced by what they referred to as a simplified 4-year foreign income and gains regime, helpfully abbreviated to FIG.
Okay, good. Okay, so just clarify for us, what is the remittance basis and how is that going to change?
So the remittance basis was that if you were eligible for that basis of taxation, foreign income that was generated offshore and kept offshore wasn't reported in the UK and wasn't taxed in the UK. And that element of the remittance basis of taxation is going away completely. In the new FIG regime, your foreign income and gains for the first 4 years of residence is just not taxable in the UK, whether you bring it here or not.
Okay, so you've got a 4-year window if you are spending time in the UK or, and actually, who is that person that's in the net, right? It's not somebody who's visiting, all of a sudden the UK government starts looking at their tax situation. Who is the person that even starts getting caught in a tax consideration from the UK government side?
So it's when you become tax resident for UK tax purposes. And some people can have the idea that, okay, if it's less than 183 days, I don't have an issue. And that's not the case when it comes to UK tax and UK residents. You can become UK resident under different criteria, and it isn't just simple as if I'm not there for 183 days, I'm okay. And once you become a resident, you need to know how that's going to affect your income tax, capital taxes, inheritance tax, everything. So it's the residence that is the real trick. And the residence for immigration and residence for tax are also very different things.
Wow. Okay. And so again, that might get triggered because somebody has a job here and might be splitting their time back and forth type of thing.
Yeah.
Is that
And
fair?
if they own a property in the UK as well, gives
Okay.
you a stronger connection to into the UK. And then the days that you can spend in the UK and still be not a resident is reduced.
Interesting. Okay.
Yeah.
I want to bring you into it because obviously, as an American specialist, relative to what Sue has outlined, uh, how does this impact Americans in a particular way? I know one of the things, being American myself, is the concept of worldwide income from both jurisdictions. So, do you want to speak to that a little bit?
Yeah, absolutely. So you're correct. Being a US person, you're subject to your worldwide income reporting, including your foreign rental income and capital gains derived from foreign properties. So first, I wanted to clarify what is a US person for US income tax purposes. So that includes a US citizen and foreign nationals who meet the substantial present test, meaning you spend 183 days or more over a 3-year rolling period with specific calculation applies. Or if you're a US green card holder. In addition, for individuals, US entities also falls under US person, this definition, meaning if you have a US corporation, US partnership, US trust and state that's organized or formed under the US law, that's also considered as a US person.
Okay, so even if you own, say, your real estate under a non-person entity such as a trust or corporation or LLC or something like that, you're going to be considered US designated, potentially according to the guidance.
Correct.
Okay. Well, great. I think that helps frame a little bit of what we're talking about here. Now, having said that, I just want to frame the reality is, for the most part, I should say, foreign nationals can buy property in the UK. Fair to say?
Absolutely. And it can be often the conversation is like, how do they purchase that property? Should they do it through a trust? Should they do it through a corporate entity? Should they do it as a personal individual? And it really does depend on what their intention is as to how that property is going to be used. If it's just going to be a place for them to stay rather than stay in hotels when they're traveling here, then both Mimi and I agree that it's just much easier from a tax point of view for that to be in their own name and not be in a corporate or trust structure because of the additional reporting requirements that are in the UK if you choose to go down that route. But some countries, it's quite common to own properties in a corporate vehicle. It's just that in the UK, you can, but you just have to be prepared for the extra layer of compliance and reporting that comes with doing it that way.
And that has, again, changed over the last few years in terms of
Absolutely.
it was an easier structure, made more sense financially and from a compliance perspective. And now that has gone away, which again, I think it's worth kind of stopping and noting at this point. Oftentimes I get the inquiry because somebody is, found me off of my YouTube channel and they approached me about buying property in London. And, obviously I would love to help and ready to jump in, but the first conversations they really should be having is with tax advisors to make sure they fully understand the implications, because what it could trigger for them from a tax liability perspective, but even trusts and wills, right? Because a will is only as good as the jurisdiction where the asset is held. So again, people assume perhaps their American will cover the UK, and that's not really the case. I mean, they're going to make life a lot more complicated for themselves if they don't have that properly structured. So one of my next questions is, what is the nature of actually filing taxes and reporting in the UK for foreigners, whether it's specific to the US or the broader world? What is kind of the requirements?
In the UK, we have what's called self-assessment. So the onus of responsibility is always on you as an individual. And unlike the US, we don't have joint filing. So I would file my own tax return. include my income, my deductions, my gains, and partner would do that for himself. There isn't any joint filing. So that's the real big difference between the UK and some other countries, and particularly the US. But there's also additional filing requirements when it comes to owning property. If you in the UK, if you then decide to sell it, because in addition to your annual self-assessment tax return, which you would only do if you were resident here, I would like to make that clear. But if you owned a property in London and then sold it, you have to, and you're not resident in the UK, you have to do a capital gains tax return just for that disposal, and that has to be 60 days after the date of completion.
Okay, interesting. Mimi, I want to ask you something specific to Americans. And again, we've touched a little bit about the worldwide income element of it. Again, being an American that has to file taxes both here and in the US, talk a little bit about the whether it's tax credits or kind of that not joint filing, but how each jurisdiction kind of cross-border treaties or things like that. Talk a little bit about how that might work for someone in terms of having to file in both locations.
So like Sue mentioned, in the UK, the UK tax returns filed on individual basis. Unlike in the US, we have a total of 5 different filing status. So there'll be single, married filing jointly, married filing separately, head of household, and qualified widow or widower with a qualified dependent. So that was subject to each person's unique circumstances. So if you were to have a, say, rental property in London, and say if you file married filing jointly, so you husband and wife both own the rental property. So in the UK, you may need to file 2 separate returns. The husband files one and the wife files one, assuming they own 50-50. So in the UK, because it's UK physical rental property, a real estate property, the UK has the primary taxing right on the rental income, the net rental income. So you will pay tax in the UK, and in return, you can claim a foreign tax credit for the UK tax that you paid on your US tax return. So to avoid, because there's a treaty in place to avoid double taxation between both countries. But one thing also to remember is US tax return is filed on a calendar year basis, meaning from January to December, and UK has a fiscal year from April to April. So that makes things a little bit more complex. So that's just something to keep in mind.
Yeah, why they can't all at least agree on that most simple thing is a bit surprising. And actually, if I can drill in again, as it gets from a practical basis, is while there's this tax treaty, which is to avoid double taxation, each jurisdiction calculates its credits differently, right? So for example, I know in America where I own property, the concept of depreciation is a normal concept, right? And it's a dollar for dollar deduction off of your taxes, depending on how that's the amortization schedule. Whereas in the UK, depreciation doesn't exist, right? So I kind of say, and maybe I'll leave it to you just to pick that up, but it's how things are calculated and then the credit is applied.
That's a great point. So depreciation is one of the biggest difference between the 2 countries' reporting requirement. Like you mentioned, in the UK, depreciation is not allowed, but in the US, because it's a foreign property, you can depreciate this property over 30 years period of time. You can get the immediate benefit of the depreciation expense deduction on a yearly basis. So in the most likely event in the UK, you will have net rental income. However, when it comes to reporting on your US tax return, because of the depreciation expense, it's likely you will end up having no rental income, end up probably breaking even or have a net rental losses. But the losses can be carried forward indefinitely to offset future year rental income. And another difference I would like to point out is the mortgage deduction. So on the US tax return, you're allowed to deduct your mortgage interest paid on your rental property. in comparison to the UK, I believe you only can do the 20%. Is that correct, Sue?
So you don't claim the interest as an expense, you disregard it, and then you get the basic rate as a basic rate reducer. So it really only favours basic rate taxpayers.
So again, a very different distinction in terms of something is applied to the concept of mortgage interest deduction.
Yeah.
Okay, super helpful. All right. Well, thank you for that. Next question we've got, which is maybe a little bit outside my domain, but it's the VAT tax on private schools. And where do you all see that having its impact? And just explain that a little bit in terms of either the thought process or, the government's thought process and what it hopes to achieve.
Well, you're not wanting to stray into the political arena because Mimi and I are tax advisors, but the VAT is defined as a tax on luxury items, and the government has moved towards the financial ability to be able to put your children through a private school as being more of a luxury item and not to qualify as a charity. That's how I understand it. So now they're saying, okay, VAT on private schools, and that's the way forward. In terms of impact, it is going to have, I think, most impact on the very good non-private schools within London that will obviously now have a influx of people that were on the borderline of private school being just about affordable, but that extra 20% has pushed them over the edge. And it's then, how do you educate these children? How do you accommodate these children in public schools that are already probably at maximum capacity? So I think it is, if you have children of school attending age and you're considering moving to the UK and buying property, then you really do have to think about the affordability now of private education, because it has, 20% is a big jump.
Yeah, and again, a lot of people might start with sending their children to the UK for boarding school as the gateway in, and then circle back to look for property. So again, it could end up impacting, my world from that perspective, because if the affordability has jumped, as you said, by 20%, that's pretty significant. My understanding is, initial at least, some schools are absorbing that and going to either phase that in or have a nominal adjustment on that VAT versus right out the gate 20%.
How they deal with it going forward is going to be up to each individual school. But in terms of how they pass it on to their clients, customers, their families, really, it is going to be down to each individual school. There has been some schools I know that were trying to get prepayment of fees before the rules came into effect, but I honestly don't think that's going to work, because the definition of prepayment is it's for services that haven't happened yet. You don't know what the fees are going to be next year. I'm not convinced that would actually work, but let's see. So I do think it is going to have a major impact on education within those areas of London now, is how those children are going to be accommodated.
Right. Okay. And Amy, just to pull the lens back up again, overall speaking, are you seeing anything particular or trend lines from American buyers over the last few years as it relates to whether buying property in the UK or, tax questions or anything like that? Anything in particular that they've got concerns about?
I think mostly they're concerned about just being compliant and just to see how much additional reporting they will have to do. Obviously, additional reporting comes with additional fees. And in addition, once you have foreign properties, it's very likely you need to have a foreign bank account. And isn't always easy to open a bank account in the UK. And in addition, if you have a foreign bank account, and then if at any time during the year, your balance is over $10,000, you have additional filing requirements called a foreign bank reporting, formerly known as FBAR. So there's no tax due on the form. It's just a simple reporting, but it's for the Treasury to kind of do part of the FETCA to keep track where your money is. So I think a lot of clients did not realize how much complexity come with owning a property, in a foreign country. But I think with the right education, I shouldn't stop them if they want to own a property here in London.
Yeah.
Yeah, just had a great conversation with an American family yesterday. And Susan, from your perspective or your world, anything in particular that folks are, or kind of, yeah, what are you seeing as far as the trends right now in terms of the new Labour government or where we've been through Brexit and COVID and all these things kind of 8 years, 10 years on? What dynamics are you seeing from your clients?
So of the longer term residents who would been here for like maybe 15, 20 years that had put plans in place with regards to their inheritance and had used particular structures that had secured or ring-fenced some of their wealth from an inheritance tax point of view, with the changes that the Labour government have introduced that have primarily affected those structures, we are seeing some people leaving the UK. Now, from a property perspective, they aren't always selling their houses. Sometimes they are, sometimes they aren't. Sometimes they're keeping them, but they're renting them out. So that's a trend that I think we're going to see more of in the next year or so, when we see the impact of those people actually leaving the UK. And when they are leaving the UK, obviously there's going to be some nice houses available in London that haven't been available before, because these rich families had secured them. And now if the UK is not where they want to be and they want to live somewhere, for example, like Italy or Dubai or Greece or one of those other jurisdictions, and there could be a nice boost to the London property market, where these properties are going to come available that once were not. So in terms of trends, I think the next year or so we'll have a greater idea of what's coming. I think it's too soon after the budget to say what the trends will be. It's definitely watch this space.
Yeah. Okay, great. Well, with that, I do think that's kind of in line with the overall sentiment from the real estate market, which is if more properties become available, obviously that is going to impact the supply side of the equation, which might suggest that property prices will continue to come down slightly, or there might be just kind of a flattening of price appreciation. But as you've mentioned, there could be some really significant trophy assets that people are going to just look at and say, you know what, it no longer makes sense to own this particular property in London, and we're going to put it in the market. So whether that's, I think the question is, for everybody's individual situation, all of these dynamics are going to impact you differently, right? And therefore, it's so important to have the critical experts that you need to guide you and help advise you, because it's not to say buy or not buy, it's just to have all the right information you need to make a decision. And unfortunately, as the rules constantly change, that guidance might change as well. I really appreciate you both coming on the channel and giving clients and whoever's watching a bit of perspective on the tax implications of buying property or investing in London. And definitely we'll put your contact details in the show notes, so if people do have questions. But as always, please reach out if you are thinking about buying property in London and have any questions, and we can definitely connect you with some of the best people to help guide you. Thanks for watching, and I'll see you in the next episode. Bye for now. If you've enjoyed this video, make sure to hit the like button. And if it's your first time on my channel, don't forget to subscribe to make sure you don't miss a single episode, as we put out weekly videos about the London property market and living in this incredible city.